Hey guys, how we doing? So in this particular video, I'll be showing you some of the secrets of support and resistance that 85% of traders do not know. I can assure you this, 85% of traders do not know what I'll be showing you right now about support and resistance. Now, the whole idea is not just to sound off like really a good guru in the market or some form of expert in the market. What I'm trying to share with you is something like very sincere. I've been able to find out, this among traders in the market. They really just don't know this, and it's really unfortunate. They just keep losing money even with all their knowledge about the support and resistance theory. Okay, so in this video, I'll be going straight to my charts to show you something that you're probably missing out, something that might actually be like the missing link in your trade to get you from becoming an aspiring profitable trader to actually becoming a profitable trader. So we're going to jump into the charts like right away. Now, this is something I just want us to make a bet before we enter this video. Now, if you learned something new in this video, give this video a thumbs up. Now, don't give this video a thumbs up like right now until you're sure that you've learned something. If you do not learn anything from the video, farewell, thanks for watching anyway. But however, if you learned something good from this video, give this video a thumbs up. But however, I would love you to subscribe first, even before you watch the video, right? Subscribe to this channel. I come on here every week to do analysis on the market, what to expect in the market, and also I share master classes, like master tips on trading psychology and risk management, which is like the most amazing part of trading. I have a video on this channel called The Rules of Risk Management. I think that's the name of the video. I can't remember. So it's somewhere on this channel. Find it. It's a 1 hour 20 minutes video where I did like a full master class on trading psychology, risk management, 10 rules of risk management. You need to watch that video if you're yet to watch it. Okay, so that said, let's jump right into this video. Let me show you from the chart what to what you probably might have been doing wrong about risk management and how to correct that. Okay, let's go. Hey guys, so welcome to my screen. So here is what the average person knows about support and resistance. The average person, the average trader out there knows that support and resistance is a level where the market has a cluster of buyers or sellers, and hopefully that the market is going to retrace, maybe do a buy or a sell when the market gets to those kind of levels. Okay, so the average person knows that once market does something like this, this is the time to buy. And if maybe let's say get something like this, it becomes a time to sell. Okay, that's the average knowledge about the support and resistance. And unfortunately, the average knowledge about support and resistance doesn't make anyone good money in the market. Let me tell you why. A lot of people are not patient enough. The reason why, this is the reason right now, a lot of people are not patient for the market to tell them that point where the price is actually a support. Now remember that support and resistance is simply a theory. It's simply a theory. It wasn't invented by the forex market. It wasn't invented by the market maker. It's simply a theory that was stipulated, and somehow it just tends to work. Okay, now most people what they know about support and resistance, they just know that if market was a support here, here, and the market gets back to this point again, the probability that this place becomes a support, it's really high. Or let's say if this was a resistance and the market tends to come over to this point again, that this place becomes a support. Now the difference with the way I apply this and how professional traders apply this is that we do not assume. Assumption is the mistake. People assume that once the market gets here, that this resistance will still push it down. It is just an assumption, and most of the time it doesn't work. You need to wait for the market to tell you. The market needs to tell you that this place is a support or this place is a resistance. So what most people do is something like this. They do something like this. Let's say this is the chart, and let's say market, it's going on a downtrend, and the market pulls back to this particular resistance. Once the market gets here, they just sell. They just sell. They don't wait for the market to confirm, to tell them that this zone right here is actually strong enough to become another resistance. So once the market price just gets here, they just assume, okay, the market is back to a resistance, it is time to sell, and they just sell. And guess what happens? 50% of the time, they lose money. You need to wait for the market to tell you that this support is strong enough to hold. Now, how do you do that? How do you know what the market is saying and when the market actually tells you that? Now, there are two major ways to do that. Okay, number one is candlestick pattern. For instance, let's say the market goes up, then comes back here, and you're hoping that market goes down. There are specific candlestick patterns that you need to see at this point to tell you that this place is actually a good place to start selling, and that the market is telling you also that this resistance is a good place, is going to hold. This resistance is actually going to happen in the market. Okay, so you don't just assume that because it was a resistance before, it will become another resistance again. It doesn't work that way. It doesn't work that way. So there are specific candlestick patterns that I personally use and I teach my students to use. In fact, there are three of them, but because I don't want to spill out the whole thing, because I don't want to spill out the whole thing that from that I usually tell my students. But however, I'll just give you one. One of the candlestick patterns that I normally use right here is head and shoulders pattern. Now, I usually wait for the market to give me something like this on this zone, on this same zone. I wait for the market to give me something like this to let me know that this zone right here is actually going to hold. Okay, that this resistance zone is strong enough to push the market. Now, that's just the first thing. That's just the first thing. Now, the second one is actually the most important one. So don't be too quick to go yet. We'll still move to the charts, but however, I need to show you these things much more clearly. Now, that's actually the first thing. Now, the second thing is this. Let's do a support, an example of support for this one. So this is the first support, and sorry, this was a support, and then the market is back here. Okay. And if you are a smart trader, just because the market is at support doesn't mean that it will automatically buy, because the market has not told you that it is going to buy. Number one, we have already told you the first way that the market show is going to buy is candlestick pattern. I told you there are three candlestick patterns I use, but I just told you one, which is the head and shoulders pattern, which confirms that, okay, this resistance is actually strong enough. Then second thing you need to know is you need to actually wait for the resistance to resist. The reason why support and resistance zone is called support and resistance zone is because a support should tell you that it is a support. You can't be trading a support that you are not sure is going to support you. The market has to show you that it is actually going to support you before you enter the trade, or the market will need to tell you that it's actually going to resist you before you start selling. So just that the market gets to this point, this thing doesn't make any sense. This past support, is nothing. It doesn't give you truly. If we're sincere with ourselves as professional traders won't tell you this, okay? But I'm just trying to be sincere with you guys. This past support doesn't mean nothing. It doesn't mean nothing until the market has told you that it has actually, this support is still going to hold. So what do? You wait for the support to actually support. So you wait for the market to at least push this up a little bit to show you that there is some form of pressure there. It is when the market is now on its way out of this support, that is when you now enter the trade, because you waited for the market to tell you that I support, I am going to be supporting this particular price at this time. So just because a support has happened in the past doesn't mean anything. Trust me, it doesn't mean nothing. You need to wait for the market to tell you that I am a support. Okay. And as far as this current price of the currency pair is concerned, I am about to support it. So you wait for either you see a candlestick pattern, a head and shoulders, most importantly, and the other two kind of patterns that I'm not going to be talking about in this video, or you wait for the market to actually bounce off first. You wait for the market to actually bounce off that zone, whether from the resistance zone or the support zone, before you now enter, on the way up. That's if it's a buy, or on the way down, okay, if it's a resistance. Okay, so let's go to the chart. Let me show you this, how it works. Welcome to my chart. So this is Euro USD chart. So let's scroll backwards. Let me show you one of the most common mistakes traders make when it comes to trading the forex market and using support and resistance theory. So let's take this place for an example. This looks like a very good example. It's like a very good example. So looking backwards, you can clearly see that this was the last the most recent, major support that happened in Euro USD. So this is actually what the zone in between this place is, the support zone. Okay, so let's go forward. Let's see what happens when the market gets to this point. Now, okay, this is a mistake that most traders make. Once they just come to this support zone and they see one, just one blue candle, one engulfing candle from this support zone, they just assume that the market is going to respond to the support zone, which 60% of the time is usually not the case. Engulfing patterns are like the weakest kind of reversal patterns out there. I told you guys there are three particular patterns that I use. I've told you one, which is the head and shoulders pattern. There are two other like really good patterns that I love to see in the market for me to trend a reversal or a trend continuation. In most cases, a trend continuation. So an engulfing pattern is like the weakest. Okay, so this is what I typically love to see to tell me that this support zone is actually strong enough. So it has bounced off the first time. Okay, and let's see whether we'll get another bounce upwards. Okay, now this is good enough entry for me. This is good enough entry. We would have entered here, but I needed this last support here, this last resistance here to be broken, which it has actually been broken. Now the whole essence of this zone is to show you, and the whole essence of this video is to caution you, do not just enter a trade just because the market has gotten to a support or a resistance. Okay, if you had entered here, this little retracement all the way down would have probably stopped you out. Let's see what this looks like on a 1 hour. So if you entered that trade, you would have entered somewhere here, This was where the 4-hour engulfing pattern happened, and you would have been stopped out with this move that happened here. You would have been stopped out here, okay, because you were impatient to wait for your trading strategy plan to actually play out very well. So this is actually looking like a good entry, but however, it's almost too late to enter at this point because this candle was like really sharp. So I'll wait for a retracement to happen, at least maybe to the 50% Fibonacci or 61%, as the case may be. Then I'll look to go long. This would save you a lot of headache in the market. Trust me, it will save you a whole lot of headache in the market. So you need to wait for the market to at least retrace. Now it has shown you clearly that this support is strong enough. The market is telling you, I am a support and I'm going to hold you. The market is making you a promise with this pattern you're seeing here, that I am strong enough, you can lean on me, you can trust me. Okay, so let's see whether we'll get a retracement, then we'll be able to enter this trade. Okay, let's see what happens. Okay, good. Okay, this is looking like a good retracement. Good enough. Good. So at this point, this is my kind of entries. Okay, this is the point where I love to enter the market. So put your take profit here. You're hoping to at least get 1.5 on this trade. Put your you can actually if you're looking to stay long in this market, you can put your support all the way below this previous support. But I don't look to this. This is more like a scalp trade. So I'm just doing let's say 1:1.8 on this particular trade. Okay, so if we move up, let's see whether we'll get 1:1.8 on this trade. Well,
Okay, at this point, what do we have so far? We have 1:1.5 on this trade. Let's just be greedy, but 1:1.5, it's good enough, but let's just be greedy to see whether we can push to 1:1.8 for this particular trade. Let's see whether we're able to get that on this trade. Let me extend this. Okay. What do we have here so far? We have 1:1.6. I just hope this our grade is not too much grade. Okay, so we're going to be stopped at. So unfortunately, what would have been able to get out of this trade is 1:1.6. Okay, 1:1.8 was quite greedy, but however, it's all good. So the whole idea, what I'm just trying to prove to you, what I'm just trying to teach you in this particular tutorial is to you need to be patient to wait for the bounce to happen. You need to be patient to wait for the support to actually support. Okay, it needs to be a happening support for you to actually trade it. It needs to be a real resistance for it needs to resist. Wait for the market to resist first. Don't just jump on it and assume because it resisted before it resist again. What if it doesn't have the strength to resist again? So you need to be patient to allow the market to actually resist for you to jump in. Or you need to wait for the market to actually support. Don't just assume that because it was a support in the past that it must. Most times it's not. It's weak. It doesn't. It's not. It doesn't have the strength to support. Okay, at that point.
So let's quickly scout for other situations. I want to show you like 2 more examples where, probably traders are usually impatient to wait for a bounce on the market before they actually enter. Okay, and which probably would have lost like really good money. Now here is a typical example. Now this is support. This is a support. Let me do a replay here. So this is a support that has been tested twice. It was tested here and tested here. What most traders do is something like this. Once the market just comes into that zone again, comes into that zone, and gives just a little sign of reversal. Okay, for instance, most traders with this, they just see this long wick. This looks like a hammer pattern that is going to probably shoot upwards. They just enter the trade, and guess what? This is what happens. Okay, the market just keeps going down. It doesn't care. It doesn't really care. Okay, and you would have lost good money, in a situation like this. So you need to wait for the market to confirm that we are going to bounce. Okay, the bounce needs to happen first of all. So here's a very quick recap of everything I tried to explain in this video. Now what I'm explaining in this video is very simple. Number one is this: you need to have specific candlestick patterns that clearly indicate that a market is experiencing a rejection from a support or a rejection from a resistance. Do not use candlesticks like just one single engulfing pattern. Those are really weak signs. So you need to develop candlestick patterns that are specific, candlestick patterns that really indicate, because all candlestick patterns do not indicate the same thing. So you need to have a candlestick pattern that clearly shows you that this resistance is strong enough to reject higher prices, or that the support is strong enough to reject lower prices. Okay, so that's one of the points I'm trying to make in the video. Now the second point is you need to be patient to actually wait for the bounce to happen. Bouncing off the from the support or bouncing off from the resistance. Enter when the market is already moving, where the support has shown you that it is clearly a support area. Okay, it's not, you don't just make assumptions. Okay, don't make assumptions that because it was a support before, it will automatically become another support. Okay, wait for the market to clearly show you that I am a support, I am a new support. Okay, I am going to support this price, I'm going to move this price, and as a proof of that, as you can see, I am bouncing this price already up. That's if you're going for a buy, or I'm bouncing this price down if you want to go in for a sell. So once you're seeing that the movement has actually started moving from out from the resistance or out from the support, that is when you jump into the trade. Let the chart prove to you that it is a support or it is a resistance before you take any step. Don't just go and buy at support levels or sell at resistance levels. You lose a lot of money, because a lot of times, many times, for 50% of the time, the market keeps breaking support, it keeps breaking resistances. So how else do you confirm that this support is strong enough and is going to hold if the market doesn't commit to you? So the market needs to give you that assurance, needs to give you that bounce, needs to give you that candlestick pattern to tell you that, guy, I am a support and I'm going to support you, or I'm a resistance and I'm going to be a resistance to resist higher prices for you to actually enter the trade. So don't make the mistake of just buying at support levels and selling at resistance levels. Okay, so cheers, that's a recap of the video. So thanks a lot for watching. I'm hoping that you've been able to learn some of the little things that a lot of people miss out while trading the support, using the support and resistance theory. This is something that I learned it, and it changed my entire psychology when it comes to using support and resistance zone, and I'm hoping that it changes yours and helps your way of trading, helps you to make really much more better trades, and of course make profit in the market. So I'm hoping you learned something. But even if you didn't, man, like this video for real. Like this video, give us a thumbs up and subscribe to this channel. I'm one of those guys out there really honest when it comes to trading. I don't overblow things. I don't tell you what is not possible in this market. Everything I tell you are things I do for myself. I apply in my own trading and has worked for me. I don't teach something I don't know. Okay, so that's it. I'm hoping you'll subscribe to this channel. Cheers till we meet again. Have a wonderful trading day. Bye.